So you're thinking of buying a house and you're worried about how your student loans are going to affect your qualification? Well, a lot of people are asking that exact same question, and I've got some information that I think is going to help you out. It's Ron Wysocarski at Wise Home Team Realty, and I want to talk to you about your student loans. You know, quite often when you go to pre-qualify for a mortgage, they're going to calculate what's called your debt to income ratio, and the components of that are pretty simple. So let's think of it this way. If you have a car payment, that's going to count. If you have Visa cards, that's going to count. And anything else like an installment loan, like furniture loans or something like that, mainly for you, it could be student loans. And the way those are treated now in your application process has changed, and for you, the better. What I mean by that is, in the past, if you're in deferment and not paying for student loans, they were going to calculate a percentage of the outstanding balance. So if you owed $100,000 in student loans, they were going to calculate $1,000 or so that count against you when you're trying to buy a property. And now we can use the exact payments. Your lender is going to see if you've got payments, even if you're in deferment. They do have to calculate what that's going to cost you, so they know that you can safely pay for the mortgage, for years to come. But now, if your payments are super low interest rates of $500 a month, that could give you a gap of $500 to $600 extra of qualifying income every month. Your qualifying income is just a percentage of what you're going to make. So if you're freshly out of school and you're making, let's say, $48,000 a year, it's $4,000 per month. 48 divided by 12. They're going to give you a debt to income ratio of about 45%. So if you take that amount and you say 4,000 times 45%, it's $1,800 of qualifying income. And if you don't have a car payment yet and you want to buy a property, I would suggest waiting, delay that gratification of buying that shiny new car until you get the house, because that won't count against you. And after you get the house, you still can get the car, but you would always want to buy the house first. And if you were careful and don't have a lot of Visa cards or $100 on a monthly payment, your qualifying income, which was $1,800, is now $1,700, and that's a healthy budget to buy a new house. That could be $250,000 or $300,000, maybe more. But if you have student loan debt and they have to calculate a percentage, the old way would take $1,000 out, $1,100 out. You'd be left with $600 qualifying income, which might only be a property in the $60,000, $70,000 range. Maybe not what you're looking for your first time out. But if you can qualify at the rate of what your payments are going to be, and say it's $500 or $600, that's going to leave you a lot more room. And maybe at $1,200 a month, you could buy in that $150 to $200 range, which might buy you a nicer home that you can use, for the years ahead. And someday, it may become your first investment property when you move on to your next house. So if you've got questions about student loans or you're not quite sure how to qualify, there's good news out there for you, and we'd love to tell you more about it. So click the subscribe button, go ahead and message us. If you have any questions about this, definitely leave a comment. We appreciate you taking the time to watch this video. It's Ron Wysocarski at Wise Home Team Realty.